Hello, everybody. So the market is panicking again. We had a beautiful day, and then the Trump speech happened, and the markets tanked hard. It's hard to not see positioning from money managers and hedge funds trying to really get those market downs. The markets is moving based on the volatility shenanigans, the whole sell the news thing. Trump unveiled what he called the USA discounted tariffs, and to go briefly over this, and I've talked about this multiple times. I mean, it seems like it's going to be the theme of 2025. Yes, the media wants your click, so it tells you, oh, it's just going to lead to higher prices. But I can tell you from listening to multiple conference calls, and from what I clearly remember back in 2018, the tariffs are paid by multiple people. They're going to be paid by supplier concessions. There's going to be lower margin for US firms. And yes, the prices are also going to increase. But it's not true to say, in my opinion, humble opinion, it's not true to say that it's just going to be higher prices for consumers. Like you don't think there's going to be concession from a foreign supplier who still wants to sell to the USA? Of course, they're going to drop their prices. And the US firm, if it's a customer-centric firm, they don't want to make the customer upset. They're probably going to look at their margin. So this effect is multifactorial. And if it seems, and it seems like it's the goal, the long-term goal of Trump on this is to have just 10% tariffs across the board for every single country. So in my world, 10%, that's 3.3% for the supplier concessions, 3.3% for lower margins, and 3.3% for the higher prices. I mean, 3.3% higher prices, like come on, that's like your standard CPI these days. So, I understand the concern, but to me, this is not as big of a deal as everybody makes it seem. It's not true to say that it's just one group that's going to pay for everything. Everybody's going to pay a little bit. And the wild card, of course, and this is what happened in 2018, is the whole idea of currency devaluation. What could happen is quite simply, you would have the Chinese yuan who would just devalue against the dollar, and then the devaluation can just eat up the entire tariff, and I could see that being a solution for a lot of currencies. So this is not a single issue, like this is not a one-sided issue. This is multifactorial. But the market doesn't get that nuance, and I really think this is nuance. The market doesn't get that nuance. The market is all about the baskets, and it's down way more right now, by the way. But it's all about the baskets. You sell the basket, you sell the whole thing. Sell bad, market bad. Let's sell. And so if you look, it's really uncanny. QQQ, it was way up and then way down, and look at Bitcoin, way up and then way down, and look at your favorite stock, and I bet you it's way up and then way down. And so what does that mean? That means that the baby can be thrown away with a bath water, as the idiom says. So in the case of this video, what do I consider the baby, the stock that is being thrown away with the bath water here? Well, it's the stock that's not going to be impacted by tariffs, or very little. And this stock includes things like stocks that have most, if not all, of their revenue coming from the USA, right? The final product, assuming they operate in the physical world, which few of the stocks I invest in do. Aside from Tesla a little bit, few of the stocks I invest in do operate in the real world, so they're not impacted. This is for good. This is for stuff, tangible stuff you can touch. And of course, the company doesn't have a physical product. That's also a type of business that would not be impacted by tariffs, but that would still be dumped right now, even though it's not impacted by tariffs. So, and furthermore, for this video, I want to really avoid making tenuous causal argument. If then this will happen, then this will happen, and then my stock will be hurt. Like the chain of reasoning has to be direct. If it's not a direct chain of reasoning, I don't think it's very valuable for an investing purpose. Like say, oh, the tariff will lead to an escalation, which will lead to a retaliation, which will lead to a trade war. Like, oh, it will make people fearful. They'll save, they'll spend less. Think about all of the things that people think need to happen to have an impact. No, all I can say for sure is that, yeah, goods coming from Europe are going to be taxed at 20% in the US. Like, that's the one thing I can say for sure. All of the rest, all of these tenuous links of causality, that's really thinking down the road, but it's I don't know. It's just not something I would base on an investment decision. I know these narratives are very, very, very strong right now, and people are saying we're definitely getting a recession, blah, blah, blah. I realize to me it's just noise. As an investor, I want to make the right decisions, and this is noise. This does not allow me to make the right decision. So let's talk about the stocks. So I have 8 stocks that I cover frequently in the channel that are not impacted in my view. The first of this stock, of course, is a stock that did fairly okay today, but I guess it's back down now that Bitcoin is down. It's MicroStrategy. MicroStrategy is digital money, digital energy. They don't even mine it, so they're totally unimpacted by tariffs, obviously. And of course, that's all about the free flow of money across states, across countries, so obviously that wouldn't be impacted. Number 2 is Bitcoin in general. So Bitcoin in general, I don't think is going to be impacted for the same reason MicroStrategy would not be impacted. Let's talk about the Bitcoin miners really briefly. So most of the Bitcoin miners that I follow, they've already received their shipments from China and Bitmain. And so those miners, in my view, would not be impacted because most of the miners I follow are even ramping or are even fully exahashed, right? They have a full exahash. Like you look at Mara's not expanding exahash anymore. CleanSpark bought everything they need already, and they've anticipated that. So I don't think the Bitcoin miners are going to be impacted, even though they do operate in the physical world. Let's talk about channel favorites, both hims and hers and LifeMD as well. Unrelated to tariffs, in my view, most of these companies have compounds that are sourced from U.S. facilities, as they brag about on their website. And when it's not sourced from U.S. facility, let's assume you may tell me, oh, the box is not maybe the box comes from China or whatever. Well, I mean, big problem, right? The box is gonna you're gonna see an increase by 30% of the price of a little box or whatever. Like it's okay if a tiny component is impacted by tariffs when we have a company that has such high gross margin, and I think that's the case for LifeMD and hims and hers. So I think they're perfectly fine. Palantir, obviously, and frankly, not just Palantir, but when you see the Nasdaq down on this, it's kind of a joke because the Nasdaq is mostly big tech stocks that don't have physical goods. Okay, aside from Apple, the Nasdaq is mostly stocks that don't have, and Nvidia could be a little bit impacted, but it seemed to me like the Taiwan tariffs were fairly reasonable compared to the rest of the world. So even then, I have a hard time imagining this is not priced in, and frankly, most of big tech, in my view, is not going to be impacted directly, unless, of course, you start making the assumption that U.S. services are going to be taxed, and then how do you tax them? And of course, think about what a U.S. tech company or software company exports, right? It doesn't export a physical good. It exports mostly margin, right? That's what it exports, right? Netflix sells $10 a month in Europe. Even if you tax that, that's mostly margin, right? It's not like a physical good, which is very, very low margin and where the tariffs have an impact. So I think companies like Palantir and the like are perfectly fine, but I bet you they are dropping pretty hard right now. Another stock, of course, a personal favorite, not a channel favorite by any means. If the comment section are to believe it, it's Tesla. Tesla, I think, is going to be one of the least impacted companies by this. In fact, out of all of the auto stock, they are the most made in USA car. And in the case of Europe, they're made in Europe. In the case of China, they're made in China. The Chinese cars are sold in China, the Berlin cars are sold in Europe, and the USA cars are sold in the US. Sure, we could lose some sales in Canada, in South Korea, in Taiwan, but that's really not that big of a deal in my view. And even then, it's even a tenuous argument that you lose some sales because, if Tesla makes cars in Germany, for example, well, they can ship cars from Germany to Canada because Germany and Canada are fine, right? They don't have any trade tensions, right? Or vice versa. Like if you're in South Korea, well, they can ship cars from China, which they already do, and they don't have to ship the USA cars. And the Model S, of course, which is made in the US, is just a minor part of the business. Most of the value chain of Tesla is in-house. It's vertically integrated. So I don't see how that's going to have a major impact. And of course, this is a stock that will benefit directly, and all the automakers that make their cars in the US will benefit directly from the tax deduction for made in USA cars that Trump wants to pass with the money that he gets from the tariffs. Then let's talk about Robinhood and SoFi, and I'll conclude with these two. These two are big stocks on the channel. SoFi bigger than Hood, but Hood is a position for me as well. again, fully digital businesses, fully digital services. How does tariff impact them? These stocks are crashing, yet they are not impacted by tariffs. So I think we're going to have another evening of fear and FUD, and the market may open ugly tomorrow morning because of this whole fearfulness everywhere. But quite frankly, in my view, those tariffs, they're going to be paid by multiple people. And if currency devaluation happens against the dollar, then in that case, you could even ask whether anybody's going to pay for the tariffs, because the currency devaluation and the devaluation is so it's the exporter's country who's dropping their currency. And if you do that, then really nobody feels the effect of tariffs. Anyways, that's also a stretch. I don't want to say it's not a stretch. This is going to be felt, but this is not the end of the world in my view, just like everybody is saying in my view. So anyways, this was not financial advice, not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.